You know those weeks when the market just feels ready to explode? This is one of those weeks, because what's about to happen with Opendoor could completely flip how investors see not just this company, but the whole real estate tech space. Earnings are coming, the CEO's got everyone talking, and there's serious money lining up behind the scenes. If you're holding Open or even thinking about trading it, don't blink, because the next few days could decide everything. Before we get into it, just tap that like button. It really helps the channel. And let's dive right in. All right, so here's the setup. This week's earnings calendar is absolutely packed. Palantir, him and hers, Uber, AMD, all dropping results. And when those big names report, they move the entire market. But for me, the spotlight is on Opendoor Technologies, ticker symbol OPEN. They report Thursday after hours. And this isn't just another earnings call. This one could redefine their story for the next 6 months. Now, Wall Street's not expecting fireworks. Analysts see earnings around negative 7 cents per share on roughly $882 million in revenue. That's about 35% lower year over year. And yeah, that looks ugly on paper. But sometimes, low expectations are a gift. We've had 1 positive and 5 negative earnings revisions in the last 90 days. That means sentiment is already in the gutter, and when expectations are that low, even a less bad report can spark a rally. And this time around, there's a new wild card, the CEO, Kazim Rizvi, or Kaz, as everyone calls him. Since stepping into the spotlight, Kaz has been doing what a lot of leaders fail to do. He's getting attention. Investors are noticing his energy, his innovation talk, and the sense that he's not afraid to shake things up. He reminds people a little bit of Vlad from Robin Hood, the mix of hype and vision that makes Wall Street curious. And right now, curiosity is exactly what Opendoor needs. If Kaz uses this earnings call to paint a clear vision, talk about new technology, data tools, partnerships, or expansion plans, the market could easily forgive the weak numbers. Investors don't just want profit, they want direction. And if he gives them a believable story about where the company's going, Open could rip higher fast. Now, let's zoom out for a second, because the macro setup matters. This week, we've got huge economic data dropping. ADP employment numbers on Wednesday, Challenger job cuts Thursday, and Michigan consumer sentiment Friday. These reports could totally shift how the market thinks about interest rate cuts. If inflation looks like it's cooling and job growth slows just enough, the Fed might finally hint that a rate cut is coming in December. And that's massive news for real estate-related stocks like Opendoor. Remember, when rates go down, mortgage costs drop, buyers come back, and the housing market breathes again. So if this week's data leans dovish, meaning softer inflation or weaker labor, it could send housing-linked names flying. You've got a setup where earnings, macro data, and sentiment are all colliding in the same week. That's why traders are calling this one a make-or-break moment. Speaking of traders, the options market is already pricing in a storm. The implied volatility suggests a potential 14% move in either direction, which translates to roughly $1.10 up or down. Bulls are targeting $8.50 to $9, while bears are betting on $7 or even $60.70. And the crazy part, around 22% of Opendoor's float is shorted. That's roughly 157 million shares betting against the stock. Now imagine this. Earnings come out slightly better than expected. Kaz talks confidently about innovation and partnerships, and maybe the Fed data hints at a rate cut. That's a perfect recipe for a short squeeze. We saw something similar in August when short interest dropped from 32% to 23%, and Open popped. It wasn't a mother of all squeezes, but it showed how quickly momentum can shift when shorts panic. Technically, things are lining up too. The stock closed at $7.77 on Friday. Triple sevens, maybe a little luck there. Support sits around $7.53 and $6.71, while resistance is at $8.35 and $8.86. If the earnings call goes well, that upper zone could be hit fast. If it disappoints, you could see 6.70 cents tested again before any recovery. Either way, volatility's coming. And for option traders, that's where the money usually is. Now let's talk about something that doesn't get enough attention. institutional behavior. Recently, we've started seeing bigger volume spikes. That's not random retail traffic, that's institutions quietly building positions. When the big players start sniffing around, it means they see potential, not necessarily short-term profits, but long-term recovery plays. Analysts, on the other hand, haven't caught up yet. Most are still bearish. The last bullish call came from JP Morgan back on September 10th. They rated Opendoor a buy, but didn't attach a price target. The highest price target on record right now is still $4, set in August. So imagine the impact if even one or two analysts come out after earnings with upgraded targets, say $6, $8, maybe even double digits. That kind of shift could attract fresh momentum traders instantly. And look, Opendoor isn't operating in isolation. If you compare them to names like Zillow and Redfin, you'll see a pattern. Redfin's been cutting costs and focusing on profitability. Zillow's leaning hard into AI-driven real estate tools. Both have seen improved investor sentiment as the housing slowdown starts to stabilize. If Opendoor shows they're following a similar path, cutting risk, improving margins, and investing in smarter tech, it could put them back in the same conversation as those names. That's why Thursday's call matters so much. It's not just earnings. It's about whether Opendoor can prove it deserves to be part of the rebound story. Now, if you zoom out to the housing market itself, it's been weirdly resilient. Even with high mortgage rates, demand hasn't completely fallen apart. Inventories are still tight, which keeps prices from collapsing. So if the Fed signals even a small rate cut in December, you'll see mortgage applications jump again, and that benefits platforms like Opendoor immediately. The MBA mortgage application data this week will be key. Last time it came in at 7.1%, but it's been swinging all over the place. If we see a stronger print, that could fuel a little pre-earnings optimism for Open. One thing traders need to remember: volatility isn't a bad thing if you know how to handle it. When a stock has an implied move of 14% and a short interest above 20%, you don't need a massive surprise to see a big reaction. Even a small headline, like a new partnership or guidance above expectations, could send it running. And that's why a lot of traders are setting up both sides, straddles, strangles, or quick option scalps, to ride whichever direction the market picks after earnings. Personally, I think this week's going to come down to how well Kaz controls the narrative. If he focuses on profitability goals, technology improvements, and long-term vision, the market will forgive the numbers. If he sticks to generalities and avoids giving any forward direction, the stock could lose momentum. At the end of the day, Opendoor has the right idea: modernize home buying and selling through tech, but it's the execution and leadership that investors are waiting to see in action. This week gives them that chance. So, what do you think? Are you betting on a breakout or waiting on the sidelines to see how earnings play out? Drop your thoughts down below. I always love reading your take on it. And if you found this breakdown useful, make sure to hit that like button, subscribe, and turn on notifications so you don't miss the next U.S. market update. Disclaimer: this video is for educational and entertainment purposes only. It is not financial advice. Always do your own research before making any investment or trading decisions.